Okay, so now we're going to explain a very basic trade on Betfair's exchange. I'm going to play around with a few figures on screen to show you how that might work out, and hopefully highlight a few points in the process as to why you would more likely to be using trading software instead of Betfair's exchange interface. So if we head over to the screen, you can see it's quite early in the morning now, so we'll pick a future horse race to play around with a few figures on screen. We can still do that even if we don't have an active market and bets to place in that market. So you're fully aware of the interface, how that works. At this stage, I just want to explain the fact that when we place a basic trade, we're trying to do several things. We're trying to place two bets in opposing directions on one selection in order to obtain a profit. And that is how trading works on the exchange. So the first thing to say with this, when people first come across this, they get a little bit confused because it's bets. So if I was to relate this to the previous eBay analogy, basically what we're trying to do is place, basically what we're trying to do is buy a bet at one price and then sell it off at a different price, keeping the difference. So they're quite relatable in that sense, and you can see why Betfair used that analogy in years gone by. And that's what we're going to show you the different outcomes on the screen for now. So in order to do that, we're going to need to place both a back and a lay. We're going to place an opening trade, a closing trade, and a hedge trade potentially. Sometimes the closing trade and the hedge trade are linked together. I say we're going to place, we're not at the moment because it's so early in the morning and there's no opportunity in the market, but we'll still show it on screen. So looking into the screen, you can see we've got the 2 o'clock at Nottingham, and there's 5 horses within this race. So if we click our potential, pretend opening trade on the favourite at 2.74, then you can see, sorry, it's changed 2.76 even. You can see that the potential outcome, if we were to place a £10 bet, would look something like the numbers on the left underneath their names, much like the previous video. All very simple. So at this case, it's just a standard back bet on the favourite, giving us a potential £10 loss on the rest. Now, in order to place our successful trade, we would then need the price to move in our favour. So if we're backing first, then we need the price to shorten. And if we're laying first, we need the price to lengthen in order to be in profit. Now, if the price was to lengthen instead of shorten after we've backed, then we would have to close out for a loss, potentially hedging up for a red figure, and vice versa with a back or lay. Notice when I say about that there, you can back or lay to open any trade. It doesn't matter which way round you do this. So assuming that we've got a £10 back trade open on the favourite here, I can tell you if we was to lay this price at 3.15, sorry, we'd actually be in a negative position because obviously the lay price is bigger than the back price, and that's not what we want. But that's also because the market's very unliquid at the moment. There's big gaps in the spread, as we spoke about previously. And so we're going to manipulate these figures here on our hypothetical bet slip here on the right. So if we were to drop, in fact, if we were to drop the price down to 2.76 and make it exactly the same, and you just watch the figures over here on the left, and I'm going to put in the exact same amount, you'll see that the two cancel each other out. Now that comes up as an error on the Betfair website, don't worry about that too much, it's just because it's the recreational side of things. But basically, if you place a back bet and a lay bet at the same price for the same value, then they just cancel out, and that is what's known as a scratch trade in the trading world. Now, to take that a little bit further, if we were to move the price down to, say, I don't know, 2.66, then you can see the figures here on the left have changed. And that is because now it would be what would be deemed as a positive trade if the market had moved in our favour and we had opened this notional back bet at 2.76. However, there's a problem. And the problem is we haven't got a hedge position, that third part, the third leg to it. So we've got opening trade, closing a trade, and then hedging hasn't been done. Hedge is basically just another word to say that we're going to spread the profit or loss across the entire market to ensure that we get the same result regardless of outcome within the horse race. So at this point in time, we've got £1 profit on the favourite and nothing elsewhere, and that is because obviously the figures here match up, and you can see that quite clearly on the screen, because if we were to place both of these bets and the favourite should win, we would win £17.60 and we would lose £16.60, the difference being £1. And if the favourite should lose, we would lose our £10 back bet, but we would gain a £10 lay bet and gain nothing but not lose anything at the same time. So that's how a basic trade works unhedged. If we were to take it one step further and said that we want to hedge this position, we'd need to change the stakes here on the right. So if we lay for more, if we lay for £10.38, you can see what's changed over on the left here. So the price has moved 10 ticks in our favour potentially, and currently you can see it's 37 pence profit on the favourite, whereas there's 38 pence profit elsewhere. Now if you were to rerun that situation I just spoke about there with the potential outcomes, that's basically because if the horse was to win the race, we won £17.60, but we lost £17.23, sorry, the difference being 37 pence. And if the horse was to lose the race, we'd lose our £10 back stake, but we'd gain £10.38, with the difference being 38 pence profit. So either way, we're in a profit. That's a potential trade. To take it one step further, if we were to assume this was a real steamer within the market, a steamer being a word used within the racing world just to say that, you know, a price is contracting heavily, sometimes horses are gambled, and there's lots of back money flows into the market, moves the price substantially. If the price had shortened even further to say 2.46, if the price had moved all the way from 2.76 to 2.46, which is a substantial move, then we'd need to change the stakes even more. So if we put them in there, that would be 11.22. And you can see once more the figures have changed a little bit further, which is a good return considering our initial back bet would have been £10. So for our £10 back trade, laying it off at 2.46, the potential return would be £1.22 regardless of outcome within this horse race, and that's purely based on the price contraction. We would have been buying that bet at one price and selling it off at another, and that can happen in either direction. So just to reinforce what's happened there, if we look at the bet slip once more, back odds of 2.76, lay odds of 2.46. If the horse was to win the race, we'd win 17.60, but we'd lose 16.38 because of the difference in prices, leaving us a £1.22 profit. And if the horse was to lose the race, we'd lose our £10 back stake, but we'd gain 11.22. Again, the difference being £1.22. So it's all very simple how a basic trade works. The complicated part becomes understanding what are the motivating factors within the market that drive price movement and cause those steamers or drifters, depending on which direction you're placing your trades. So whilst we're still on this screen, there's one more thing that I want to highlight, and that is the difference that you can have from using trading software. So on the Betfair website, we've already touched on it in previous clips. You know, you need to hit refresh consistently. Obviously, there's not really a lot happening in the market right now because it's early in the morning. But with trading software, you have instant refresh. So, you know, all this information is being updated, 200 milliseconds, 5 times a second, giving you a far clearer view as things change, because time and speed and reactions are really quite important. Following on from the speed and reactions issue there, the fact that you get one-click betting with trading software is very important also, because as you may see within some of the later videos, prices move fast. You want to get your bet on, and it's all about price, because we're all about taking the value in the price. When we see something happening, we need to act on it there and then and take some money out of the market. If we're slow to respond, still clicking the refresh button, going over to the bet slip, typing in stakes, selecting odds, the price is gone in most instances when you've seen an opportunity and an imbalance within the market. So using the Betfair website is not ideal for those reasons if you're looking to trade. On top of that, you can see that I've managed to calculate those stakes there, and that's no fluke. That's obviously because I've worked that out before recording this video. You need to work out the differences between them there and place your potential trades. But on software that is literally, again, it's calculated for you. It's one click. As you'll see in the next video on the ladder interface, there's a profit and loss column, and these kind of calculations are made for you, and you don't even have to think about it, allowing you that extra effort and foresight to focus on what's actually happening in the market rather than working out the trivia that happens around placing a trade. And then the last thing to mention out of those points would be streaming information. So with the Betfair website, yes, we have got the Betfair charts, as you'll see on the screen now. Gives you a little bit of history, a little bit of information. Although in trading software, there are additional charts that you don't get on the website, and they are basically plotting information that is changing live while it's refreshed, and continually streaming it across the screen so you can see what's happened over the last 10, 20, 30, 40 seconds, rather than sort of clicking on each individual chart where you can't compare them against each other very easily, and they're very slow to refresh. So I think that highlights exactly why you'd rather use software than the website. We're now going to move on to trading software, look at a few of the screens, give you an overview, and get kicking there.